Hi everyone, welcome back to Corporate Decoder, the place where we decode what's really going on behind those financial filings. Today we're diving into Celularity's latest report, and let's just say things are looking interesting. Think of it as a corporate thriller with a side of financial job matters. Make sure to subscribe and join our Discord community, linked below this video. Celularity is a company that deals with cell therapy and regenerative medicine. Basically, they're trying to create new treatments using the body's own cells with a special focus on things related to aging, like cancer and other diseases. They also have a business selling biomaterial products that come from placentas, which are used for things like wound care. Let's jump right into the numbers. Looking at their balance sheet for March 31, 2025, we see their cash and cash equivalents are down to about $293,000. That's a pretty sharp drop from $70,38,000 at the pretty sharp drop from $70,38,000 at the end of December 2024. Total assets have also shrunk slightly to about $1,239 million from $133 million. On the flip side, their total liabilities are up to over $438,000 at the end of December are $23 million. On the flip side, their total liabilities are up to over $133,000 at the end of December 2024. Total assets have also shrunk slightly to about $299 million from $134 million. This means they owe more than they own, which isn't exactly a strong financial signal. Now let's look at how much money they brought in and spent. For the first 3 months of 2025, Celularity reported total revenues of about $11.4 million. That's down from $14.7 million in the same period last year. A big reason for this drop is their product sales, which fell by almost $4 million, a 30% decrease. This is a concerning trend, especially when you see that their cost of revenues, the money spent to make those products, actually went up by over 100%. So they're selling less and spending more to make what they sell. This all adds up to a bigger loss from operations. For the first quarter of 2025, their operating loss was nearly $10.5 million, up significantly from about $7.2 million in the first quarter of 2024. That's a 42% increase in their operational losses. This translates to a net loss per share of negative 84 cents. That means for every share of stock, the company lost 84 cents in this period. And then there's the stockholders' equity, which is basically what the owners have left after all the debts are paid. For Celularity, this number is actually negative $5.5 million as of March 31, 2025. This means on paper, the company owes more than it's worth. This is a pretty big red flag. Let's look at their accounts receivable. They have about $15 million in money that customers owe them. What's interesting is that they have an allowance for credit losses, which is money they don't expect to collect, of over $6 million. This means a significant chunk of what they're owed might never be paid. Now, this next part is really important. The company itself flags a major issue: substantial doubt about our ability to continue as a going concern. This is a phrase that usually means the company might not be able to stay in business for the next year. They mention relying on outside capital, which hasn't been secured, and they're facing potential delisting from Nasdaq. They also point out that a large part of their debt is subject to forbearance agreements, meaning the lenders have agreed to hold off on demanding repayment. But if certain conditions aren't met, those lenders could seize assets. This is a serious situation for any company. Adding to their troubles, they received a notice from Nasdaq in May 2025 because they failed to file this report on time. This delinquency can lead to delisting from the stock market. While they've been given an extension to file, there's no guarantee they'll meet the new deadlines, which could severely impact their ability to trade and raise money. Looking at their liabilities, a significant portion is made up of warrant liabilities. These are essentially options to buy the company's stock. For example, they have a warrant liability related to RWE incentives or sweeteners in debt deals, but they represent potential future dilution for existing shareholders if exercised. They are also carrying significant stock-based compensation expenses. For the first quarter of 2025, this was over $2.6 million, which is a big chunk of their operating costs. This is essentially the cost of giving employees and executives stock options and other equity awards. Beyond the financial numbers, Celularity is involved in some legal battles. One notable one is a lawsuit against Evolution Biologics, where Celularity is trying to recover unpaid invoice amounts. But Evolution has countersued, alleging breach of contract and fraud. This legal back and forth can drain resources and create uncertainty. Breaking down their business, they have three main segments: cell therapy, degenerative disease, and biobanking. The cell therapy part is where they're developing new treatments, but it's still in the early stages with no revenue yet. The degenerative disease segment sells biomaterials and seems to be their main source of current revenue, but even that saw a significant drop in product sales. Biobanking, which collects and stores cells, is also a part of their business. Their product sales, which is their main commercial revenue stream, dropped by almost 30% in the first quarter of 2025 compared to the same period in 2024. That's a significant hit and suggests they might be losing customers or facing tougher market conditions for their biomaterials. They also had a substantial loss on debt extinguishment of nearly $5.7 million in this quarter, much higher than last year. This happens when a company restructures or pays off old debt, and it signals potentially difficult financial maneuvers they've had to make. When we look at their liquidity and capital resources, the situation is stark. As of March 31, 2025, they had only about $300,000 in unrestricted cash, combined with no secured additional capital and a growing pile of debt. The company is in a very precarious financial position. They explicitly state that they don't expect to generate revenue from their cell therapy products for years, and even their existing businesses are facing challenges and fought back to Weth Ox at for years, and even their existing businesses are facing challenges. Now let's put on our Warren Buffett hat and analyze this. Celularity is essentially a company in a high-risk, high-reward industry, biotech and cell therapy. Their core business seems to be innovation, trying to develop groundbreaking medical treatments. However, the financial realities are harsh. The sharp decline in product sales, coupled with increasing operating losses and a negative equity position, suggests their current commercial operations are struggling. The going concern warning is the most critical takeaway, meaning investors should be aware of the high probability of significant financial distress, or even bankruptcy if they can't secure new funding very soon. The substantial debt and warrant liabilities add another layer of risk, potentially diluting existing shareholders and creating a heavy interest burden. While they have a strong vision for cell therapy, excelling in that highly regulated and capital-intensive field requires deep pockets and a steady hand. Right now, Celularity appears to lack the financial stability needed to navigate these choppy waters. Their direction seems... Ultimately, Celularity is in a tough spot. Their long-term potential in cell therapy might be there, but their short-term financial health is incredibly fragile. Investors would be wise to approach with extreme caution, as the risks are very high. Alright, that's our breakdown of Celularity's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.